We're down 0.7% today. With regards to the volumes that we've been seeing, of course, we know earlier this week we had a drop-off in volumes. Did you see things picking up today?
Yes, good afternoon. Thank you for having me. Yes, the market is still subdued, but importantly hovering just above the 4,000 mark. And when it's up there, as long as we're above that mark, not too much to worry about. However, we've seen a lot of the slew of news begin to come in with the banks. Cooperative Bank yesterday released Q1 results. Today we've also seen KCB do the same, and with both of them we've seen double-digit growth in interest income, a huge reduction in interest expenses, and absolutely fantastic results, which should hopefully spur the markets upwards.
Well, I mean, the likes of Kenya Commercial Bank, we saw first quarter profit jumping 32%. Cooperative Bank out yesterday, first quarter profit, pre-tax profit, jumping around 57% or so. Do you think these kind of growth levels were largely priced into the market? I mean, given the fact that we're still seeing the NSE overall under pressure?
I don't think they are fully priced in. They are a bit on the higher side towards analyst expectations, so it's good news for now. However, for Cooperative Bank, yesterday we did see the market pick up slightly, but today we've seen it reduced, shed a few points, about 5% or so on the share price. So fantastic as the news is, most of it had already been factored in by the markets.
One of the things that we have been seeing is, of course, lower cost-to-income ratios coming through from many of the banks in Kenya, but it seems that costs still very much a big issue when you base it relative to what we see the costs here in South Africa. Do you think that the cost-cutting that we have been seeing are basically one-offs, or do you think that we could see a sustainable flow and a sustainable cut in the costs?
Yes, the cost aspect is really critical. Actually looking into those results more keenly, we've seen double-digit growth, about 12%, especially for Cooperative Bank in terms of staff costs. So these are a critical issue, and we think that down the line it will stabilize. But at this point in time, I think that with the expansion plans that most of the local banks have locally and into the region, the cost issue really is one to be watched.
Well, which bank would you be buying at this point in time, given the fact that many of the banks are experiencing double-digit growth, but they're also seeing double-digit cost growth?
That's a very interesting one. I would pick a top-tier bank, probably Equity Bank, which is the largest by market capitalization. In fact, today they just announced and launched a program to help their core customer base increase their financial literacy, as well as support entrepreneurial growth. And this really are some of the issues that are absolutely key. So Equity Bank doing fantastically well on that front to ramp up its core client base. Similarly, Cooperative Bank would stand to benefit from the higher commodity prices. Remember, their core base for Cooperative Bank is the cooperative institutions, which are bound to benefit from spiraling commodity costs.
Another interesting story that was out today, the Capital Markets Authority approving the lifting of the suspension of trading in Uchumi supermarkets, a company that has been suspended for quite some time. How do you think this is going to change the playing field? We know Uchumi has had its own set of issues over the last few years. Do you think that it can overcome those problems and that it could attract investors going forward?
Yes, I think Uchumi has been really the bounce back story, the resilience of the Kenyan people, the resilience of the market. So this CMA lifting the suspension is absolutely phenomenal news for the market. We hope that the retail investors will also come in now and that their concerns about investing in the stock market have been addressed by this relisting of Uchumi. So we are yet to see very huge changes as far as the profitability is concerned. Still everything is in line with analyst expectations, so Uchumi is still a counter to watch.
Let's delve into the Kenyan consumer. You're talking about the resilience of the Kenyan people. We're seeing the beverage sector, exciting things happening there. SAB Miller looking to head back into the space, Pepsi company as well. From perhaps telecoms wars to beer wars to beverage wars to consumer wars, how do you see this playing out?
Yes, the beverage sector is absolutely exciting right now. We have SAB Miller re-entering the Kenyan market. We also have PepsiCo re-entering the Kenyan market. So it's going to change the entire industry. Beginning with SAB Miller, the increased competition is going to force East African breweries perhaps downwards. We saw last year the regulatory framework be changed, and that has impacted the beer sales quite significantly. And so the re-entry of SAB Miller would really spur that sector, though it's not particularly positive news for East African breweries. Changing gear on the other company which is expected to come in, PepsiCo, this will also increase competition for Coca-Cola. And PepsiCo, having been absent for about 2 decades or so, will really reinvigorate the soft drinks market. Important portfolios, important counters to watch on that would be Carbasid, who manufacture and distribute the gases for carbonation. Also, Centum Investment Company, which has huge stakes in 4 Coca-Cola bottling companies, and also as well as in Carbasid. So the impact on that as to several portfolios is something to look out for. Additionally, also Kenya Re, a big investor in East African breweries. So there will be a big impact from the beverage sector.